Gold Daily Analysis, June 28, 2011, commoditiesmansion.com. August gold rallied on Tuesday under thin trading conditions. Volume was light, and the rally may have been triggered by short covering ahead of Greece's austerity vote rather than fresh buying. Although the close above the psychological 1500 area could develop into something important at this time, it doesn't mean too much, as investors clearly have a little too much on their minds to worry about price levels. Optimism over the potential favorable austerity vote in Greece was the key driving force today. Gold has disappointed investors and traders recently because of the lack of follow-through to the upside in the midst of a potential currency crisis and thin trading conditions that made it appear the market has been abandoned by the big boy traders. Uncertainty has been plaguing this market and keeping bullish traders on the defensive. It sounds funny since many believe that financial uncertainty is one of the reasons why investors throw their money at the gold market. During the year-long rally we've seen in gold, however, sentiment changed gold from a hedge against uncertainty into an investment vehicle. So while some may continue to buy gold, banking on financial turmoil and uncertainty to drive it higher, it looks as if many more investors are just interested in protecting their investment in gold. This means converting to a philosophy that includes taking profits and protecting the downside, just like an investor would do with a stock that has reached historical highs. The bottom line is that while talk of $5,000 gold has contributed to its run-up, and with no other investment vehicles returning a more than reasonable rate of return, gold investors have to protect what they have and try to avoid giving back too much of their gains like investments in real estate and equities have done over the past years. The short-term focus for gold traders is the lack of inflation and the Greek sovereign debt issue. Recently, more traders seem to be using the Swiss franc, Japanese yen, and US dollar as safe haven investments. This is even more evidence that perhaps gold is losing its luster as a store of wealth and safe haven during periods of global financial instability and inflation. During the next few days, gold is likely to get a boost if Greece passes its austerity measures. This event should trigger a relief rally in the euro and a sharp break in the dollar. With the dollar lower, expectations are that gold will rise. Technically, however, gold appears to have limitations to the upside. While the close back above the 618 percentage level at 1547 is impressive, it doesn't indicate anything except short covering at this time. A close above the 50% level at 1511.70, this green horizontal line, will be more important, but it will still not indicate that the market has returned to its previous bullishness. Although the trend is far from turning higher, be back above this 1559.30 area, you can see clearly we're in a downtrend. Gold may have to form a base in this retracement zone, bounded by 1547 and 1511.70, setting up for a potential rally back to 50% of this current break from 1559.30 down to 1490.80. This could take the market back up to about 1525.05. At this price, it may encounter another round of fresh selling pressure. The downtrending Gann angle, this red line coming in at 1519.30, could also stop the rally before it even hits this retracement zone at 1525.05. So the technical picture doesn't paint anything, or doesn't look anything bullish right now for gold, although the market is susceptible to short covering rallies. A failure to attract the buying power it needs to reach new highs will be a sign that gold investors are becoming more concerned about the lack of inflation and economic growth than they are about sovereign debt problems. For further information, go to commoditiesmansion.com.